Welcome to Market Pulse Daily. In today's extended market update, we'll break down what's moving global financial markets, including U.S. stocks, macroeconomic trends, central bank policy, and cryptocurrency markets. We'll also discuss what these developments mean for investors and what to watch in the days ahead. U.S. stock market update. U.S. stock markets showed mixed performance as investors reacted to a combination of economic data, corporate earnings expectations, and ongoing signals from the Federal Reserve. Major indices such as the S&P 500 and the Nasdaq remained sensitive to interest rate expectations, while the Dow Jones showed relatively more stability. Technology stocks continued to experience volatility, as higher interest rates tend to pressure valuations in growth-oriented sectors. At the same time, defensive sectors like healthcare and consumer staples attracted modest interest, reflecting a cautious tone among investors. Market participants are closely monitoring inflation trends, labor market data, and upcoming earnings reports. While recent data suggests that inflation is gradually cooling, it remains above the Federal Reserve's long-term target. This has reinforced expectations that interest rates may stay elevated for longer than previously anticipated. Investor sentiment remains cautious, but not overly pessimistic. Volatility levels suggest that markets are still searching for clear direction, especially as uncertainty persists around the timing of future rate cuts. Macroeconomic and central bank outlook. From a broader macroeconomic perspective, recent data points paint a mixed picture. Consumer spending has remained relatively resilient, supported by a strong labor market. However, rising borrowing costs are beginning to weigh on business, investment, and housing activity. Central banks, particularly the Federal Reserve, continue to emphasize a data-dependent approach. Policymakers have signaled that while inflation is moving in the right direction, it is too early to declare victory. As a result, interest rates are likely to remain restrictive until there is greater confidence that inflation is under control. Globally, other central banks such as the European Central Bank and the Bank of England are facing similar challenges. Slowing economic growth, combined with persistent inflationary pressures, has made policy decisions increasingly complex. The key question facing markets is whether the global economy can achieve a so-called soft landing, where inflation declines without a significant economic downturn. While this outcome remains possible, risks of slower growth continue to linger.
Cryptocurrency market update. Turning to cryptocurrency markets, Bitcoin traded within a relatively narrow range as investors awaited clearer signals from traditional financial markets. Overall crypto market sentiment remains closely tied to broader risk appetite. Ethereum showed relative stability, supported by ongoing developments in its ecosystem and continued interest in blockchain-based applications. However, trading volumes across the crypto market have remained subdued, reflecting a wait-and-see approach among investors. Altcoins experienced mixed performance, with some assets benefiting from short-term momentum while others lagged behind. Regulatory developments and macroeconomic uncertainty continue to influence crypto markets, particularly as institutional investors assess risk exposure. Despite short-term volatility, long-term interest in digital assets remains intact. Many investors view crypto as a high-risk, high-reward segment that is best approached with caution and proper risk management. What this means for investors, today's market environment highlights the importance of discipline, diversification, and a long-term perspective. Elevated interest rates continue to impact asset valuations, especially in growth-oriented sectors, while defensive assets may offer relative stability.
Volatility is likely to remain a feature of the market as investors react to economic data and central bank communication. This reinforces the need for risk management strategies, such as position sizing and portfolio diversification. In crypto markets, price movements remain highly sensitive to macroeconomic conditions. Investors should be aware that digital assets can experience sharp swings in both directions, making them unsuitable for short-term speculation without proper risk controls. Overall, staying informed and avoiding emotional decision-making is critical. Market cycles are normal, and periods of uncertainty often create both risks and opportunities for patient investors. Market outlook. Looking ahead, markets will continue to be driven by upcoming economic data releases, including inflation reports, employment figures, and central bank statements. Corporate earnings will also play a key role in shaping investor sentiment. Short-term market direction may remain choppy, but longer-term trends will depend on how quickly inflation continues to ease and whether economic growth can remain resilient. Investors should remain flexible and prepared for changing conditions, as markets adjust to evolving economic realities. Closing, that wraps up today's extended market update. Thanks for watching Market Pulse Daily. Stay informed, manage risk, and we'll see you in the next update.